This is our Forex blog for January 14th, 2014, and this is our currency indexes, which let you see visually what each currency is doing. You can see the dollar index, euro index, pound index, and yen index. And basically, in a nutshell, what you want to do is buy the ones that are trending up versus the ones that are trending down, or if the currency that's on top is weak, you would sell it versus the one that, if it was on the bottom, is going up. So let's take a look at these. You can see the euros going up, the daily trend's up, the weekly monthly trend's down, so it's not the best one to be buying versus the weak yen, which you can see also has a weekly and monthly trend that's up. It's just happened to be going down today. But nonetheless, the euro's strong, the yen is weak today, and basically you want to look for buys in this. And there's a couple ways to do that. One is to look for a pullback, which I'm going to showcase it on the chart. It would be something like this. Draw your trend lines over the bar's high. When it breaks, you go long. You put your stop underneath the low, and you can see your win is considerably more than what your loss is. And you have another pullback, maybe right here, and kind of works its way up. Whether you got in or out with a small profit, regardless, you made more probably than what your risk is. And one of the methods that we use is kind of a rectangle pattern breakout, and this is more of a wedge pattern, and that was the biggest one of the day, a little bit before 12. And you can see right before 12 the yen has been going down and kind of sideways, and that's when it broke down to new lows. You basically just want to find the currencies that are strongest on all time frames and weakest on all time frames. So let's look at some of the other ones. You can see the CAD extremely weak on all time frames, the New Zealand extremely strong on all time frames. This is one of the higher probability trades you're going to find. You're going to look to buy the New Zealand versus the weak CAD. And as you can see, just very high probability. You have an up move, pullback, you go long, your stop's underneath here, a little minor pullback. When you have a currency that's that strong on all time frames and versus one that's that weak on all time frames, you really just got to take every shot at it. You can see that was a big win here, little pullback, maybe you lost on that one. By the breakout, it went up, pulled back, you move your stop up, pulls back, you move your stop up. And you always want to draw your fib targets on there to give you an idea. Usually the market doesn't go beyond the 1.618 fib target. So this first move up from here to here, this one actually went to the 2.0 level, kind of rested sideways for a while. Right here, you redraw your fibs. Guess where it went? Right to the 1.382. So when you have your fib areas on there, if you were to buy this little wedge pattern right here, you already have your profit target. And really the key to trading is small losses, big wins. I was trying to draw a little circle on here. If you got in, that's your risk. This is your likely reward, and it hit it, went a few pips beyond it, and you can see it went about 4 times more up than what your risk is. These are some of the perfect trades. Now, for those of you who don't want to learn how to trade, you just want to trade, maybe just euro dollar or some of the currencies that you like, you can just take our Forex Signals, which are based on about 150 different trade patterns. You can see a huge win here, decent win, small loss, win, 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 and win. You get short when the arrow pops up, which is the close of the bar. These are range bars, so you'd be short here at 84, out at 77, very small win. This one you would have been long at 79 and out at 84, very small win. But you also catch some big ones, like here, in at 54, out at 90 for a 35 pip win, and you probably made about 20 pips on the way down here, 15. And today was a pretty low volatility day. Now you see the CAD is weak on all time frames. We saw before that the euro was strong, and so was the pound. You can buy the euro CAD or the pound CAD too, and you're going to have very high probability trades. Usually not all the trades are going to work. Here you have a little sideways rectangle breakout. Your stop's underneath here. Kind of goes up a little bit, comes down, you move your stop up, and then it goes up and kind of runs out of steam. You made 20, 30 pips on that trade. Get long again here, kind of goes up a little bit, you move your stop, goes up again. And at that point, usually you want to use something called a time stop. If it doesn't go 10, 15, 20 pips your way in half an hour to hour, you want to move your stop up and then kind of just draw a trend line on here and trail it. So here you have a pullback. Notice it did not go below the day's low. You got long again. And you might have got stopped out of here. You might have had to get back in there for another trade. And every time it makes a new high and pulls back, you can also yank your stop up. That's a very effective method. When new highs, and you would have got stopped out right here with an astronomical big win compared to what your risk was. For that last trade, if you got in here and you got stopped out somewhere around here, you made about 5 to 8 times bigger profit than what your risk is. And that's the key to trading. Small losses, big wins.